Republicans in the U.S. Congress have hit a last-minute snag in their drive to approve the biggest tax laws rewrite in 30 years, requiring another vote on Wednesday and delaying what would be their first major legislative win under President Donald Trump. The Republican-controlled House of Representatives passed the tax package on Tuesday afternoon, local time, sending the bill to the Senate, where a staff official ruled 3 provisions of the House bill did not comply with the Senate's complex rules, Independent Senator Bernie Sanders said. The plan was for the Senate to delete the 3 offending provisions and vote on the bill. If approved, which is widely expected, the bill would then be sent back to the House for another vote on Wednesday. The bill initially passed the House by a vote of 227-203, overcoming united opposition from Democrats and 12 Republicans who voted against it. The plan includes steep tax cuts for corporations and wealthy taxpayers, as well as temporary tax cuts for some individuals and families. It repeals a section of the Obamacare health system and allows oil drilling in Alaska's Arctic National Wildlife Refuge, just 2 of many narrow changes added onto the bill to secure its passage. Middle-income households would see an average tax cut of $900,174 next year, while the wealthiest 1% of Americans would see an average cut of $51,066,500, according to the Nonpartisan Tax Policy Center, a think tank in Washington. The bill would slash the corporate income tax rate from 35% to 21%. Republicans insist the package will boost the economy and job growth. We're delivering a tax code that provides more jobs, fairer taxes and bigger paychecks to Americans across the country, said Representative Kevin Brady of Texas, Republican chairman of the Tax Writing Ways and Means Committee. Our local job creators will see the lowest rates in modern history so they can invest more in their workers and in their future. They also see the measure as key to retaining their majorities in the House and Senate in elections next November. Democrats say the bill will deepen the income gap between rich and poor Americans, while adding $1.5 trillion, $2 trillion, over the next 10 years to the mounting $20 trillion, $26 trillion, U.S. national debt. They called the bill a giveaway to corporations and the wealthy, providing little, if any, tax help to the less well-off, and no likelihood business owners would use their gains to hire more workers or raise wages. The Republicans' contention that the bill would make taxes so simple that millions could file on a postcard, an idea repeated often by the president, was simply mocked. What happened to the postcard? We're going to have to carry around a billboard for tax simplification, declared Richard Neal of Massachusetts, the top Democrat on the Ways and Means Committee. Tax cuts for corporations would be permanent while the cuts for individuals would expire in 2026 in order to comply with Senate budget rules. The tax cuts would take effect in January.